All right, Stallion, let's break down point number one here. Does debt freedom equal financial freedom?
No. I'll just go ahead and say no. Next
Well,
question.
why? Give me a why. Why you believe that?
Well, because it's just as simple as if you think about the logic behind this, you're trying to accomplish the end result of having your time back, right? You want to have more passive income than you have monthly expenses. That is the true way to clear up your calendar and not work for somebody else, right?
True.
Well, at the end of the day, on that side of the equation, the monthly expense side of the equation, that is not only debts. If you paid off all of your debts, you still have other things under that column. It's like my insurance, my car maintenance, my gas, my air, like all electricity, all these things. These are the cost of living. And you're never going to ever pay those off. Those are going to keep coming back every single month. And if you've never spent any time on the passive income side of that equation, and you've only focused on just paying off debt, you still are not where you can just take your foot off that, driver's seat of making active income because you haven't done anything to produce that passive income.
Well,
that to me is the key.
Mark, I want to ask you this question. So in your experience, do you believe if somebody though on their path to eliminating all debt, could that lead them to financial independence? I know what Joey says that they have to have passive income that exceeds their monthly expenses, but is there some level of acceleration that may happen in your opinion or no? Or are there other factors at play?
Somebody with what is no, Russ? Debt freedom. Here's the way I think about it. Debt freedom does not necessarily lead to financial freedom. Financial freedom can definitely lead to debt freedom. So to Joey's point, paying off all my debts is not necessarily going to make me financially free. It's going to make me debt free. And if that's your goal, kudos to you. Awesome. I'm not here to take away your goal if that's what you want to do. But if you want to be financially free. So I got a gentleman, he's from New York, works in high finance down on Wall Street. Incredibly stressful job. He's now on a little bit of a hiatus from work. He's on a paid leave, which he's enjoying. But he said, I do not want to go back. And so we talk about, hey, how are these things kind of working through? And even if he had paid off all of his bills, paid off all of his debt, right? No car, no house, no, like all those debts are gone. Still got 2 kids he's got to feed. Still has a wife, still has himself. So there's still 4 mouths that have to be fed. Roof has to be maintained, electricity, everything. That's not going to do it. He needs passive income. He needs financial freedom so that he does not need to go back to that job or to a job that he doesn't want to do, right? So he doesn't have to do something he doesn't want to do. And that's the difference between debt freedom and financial freedom, in my opinion.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out how does this all connect into my own personal system.
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before. Go to whatswhatwallstreet.com/PIOS. Eric, I want to ask you maybe a more philosophical question, right? You came from a background of teaching the Dave Ramsey way, right? I'm correct in saying that, right? You were, I forget whatever the course is. What was the course that you taught?
Yeah, 20 years ago, I went to Brentwood, Tennessee, and got fully authorized to be a certified counselor.
Right. And so yeah. And we know, if you follow Dave Ramsey at all or know that he is big on getting debt free, living debt free. And also I know as a believer, right, there are points in the Bible that talk and specifically talk about avoiding debt. So how do you find that balance, right? Do you, for someone who used to teach that and obviously following and being a believer and the Bible talks about avoiding debt, how do you find that middle ground? Is there a middle ground? And if so, how do you think about all of that?
Yeah, I think if you're going to live by biblical standard, you have to wrestle with these things that you hear at least others say about this is what the Bible says about debt or any other subject. And so I have wrestled with those. And for me, based on my understanding, it's not to take on a debt you can't pay back. Make sure you're in a position that you've fully counted the cost and you have an expectation in your heart, soul, mind, and body that you're going to be able to pay that debt back. And so for me, that settled that question. And I do try to look at debt very, very closely. And I think we all probably have that. We probably don't have it drawn out or don't have an active meter in our mind. I know that there's a couple congressmen that have had a pen made up that's calculating the national debt at all time. So we probably sort of have that in our mind where our debt is in relation to our income. And we try to keep an eye on that. So I think it's critical to manage that. But here's what I think is important is we have to back up. You have to back up. It's not about necessarily is debt good or bad. We can have those arguments. But how are you going to reach your goals? And how are you going to reach your goals if you don't know what they are? So you have to understand what your goals are and learn not to take more risk than is necessary to meet those goals. And that risk can come in many forms. Let's look at it like this. Let's say that you had $100,000, Russ, and you could take that $100,000 without debt and go buy one rental property that would generate $500 a month. That's $6,000 a year. Probably in most people's world, that wouldn't move the needle very far. Or maybe you could take that $100,000, use some debt, and buy 10 homes. Now you're cash flowing $5,000 a month, for example. Now that is going to move you maybe towards your goal of becoming financially free. With the houses that are, the asset that's backing up the loan or the debt that you've taken. So what is the risk there in an asset that's generally increasing in value? I just think it's really important to know what your goals are, not take more risk than you have to reach those goals. And you can't know that till you know what your goals are.
I agree with that. I think we have to better understand who we are. And you started to describe, we wrote a book out there, The 3 Steps to Financial Freedom to Passive Income. And those 3 steps, Diane, if you remember, were goal, plan, and support. And I don't think enough people have decided what their goal is, right? If the goal is debt freedom and that's all you want, then create a plan to get in there. That's perfectly good. If the end result of the debt freedom doesn't lead you to what you really want, right? Usually it's a layer behind or 2 after that, right? It's usually what's the benefit of that? If you're trying to accomplish something, ask the question, what's the benefit of that? And keep asking it until you get down to, oh, no, that's what I want. So like if I were to say, man, paying off all my debts is what I want. And I had to ask myself the question, what would be the benefit of that? And I'd go, well, I would have less payments. Well, what would be the benefit of that? Well, then I wouldn't have to make as much income. Well, what would be the benefit of that? Well, I would get to spend more time with my family. So I really kind of start to get down to what is it I really want, right? Oh, is it to spend more time with my family? Yeah, that's really the biggest goal. And I attached in my head that having less payments equaled not having to work as much meant I could spend more time. So then I could go back and say, all right, well, let's shift this back up. Let's put my goal back at the top of spending more time with my family. Now, step number 2 is creating a plan. And a plan could be option 1 is pay off all debts. Option 2 is maybe consider what options, which debts I need to pay off, right? Option 3 maybe considers the investor I need to become, like kind of to your point, and all the different paths in there. So I want to kind of lead to point number 2. We want to talk about more strategic debt management, maybe the when and how to pay off debts, right? I think we agree that there are debts to pay off, even if we don't believe we need to be debt free. How do you decide, Joey, which debts to pay off? What is there a way to do that? And is there a framework, or is it very emotional and you just have to decide on your own?
I think there's a couple of different variables and frameworks that we could point to on this particular question, Russ. I'm going to give you a free resource as well. If you go to payoffguide.wealthwithoutwallstreet.com, you get it for free. It's our priority payoff guide that when you type in the balance on your debt that you're considering, along with the payment amount and the type of loan, it adds it onto a spectrum from 0 to 300. And anything below 50 as a score is the danger zone. That's the ones that you should pay off first. And the ones that are closer to the 300 side of the spectrum are the ones that you probably don't need to focus on because they're super efficient. It's an inefficient versus efficient scale. And what I would like to do, especially when people walk through our accelerator course, where they're working with one of these coaches and they're going through their cash flow analysis, they're typically going to take this priority payoff guide and put all their information in. And you know what happens is people start to recognize, wait a minute, this big debt or this whatever it may be was really weighing on me emotionally because there's a payment associated with it. There's something that like emotionally I was tied to this payment and I wanted to get rid of it. But once I, as you said and pointed out, recognized that my goal was financial freedom and I could use an objective tool like this priority payoff guide to look at the numbers, it's like, wait a minute, would I be better off? And maybe one of you guys could kind of walk through how you do this with the passive income side. Would it be better off for me to focus on paying off this debt now or buying a passive income asset? Which one is actually going to get me to financial freedom faster? And once you've done that, like once you've really had that mental mindset shift, all of a sudden things become super clear, less emotional and super clear about what your next right thing is.
If you're watching this on YouTube, you actually can go and see this priority payoff guide at work where we were putting in different, types of debts, their balances and the payments. And it shows you an actual index. Like it shows you which ones are priority to pay off, which ones you should focus on. And I think that that's the most important part that you have to consider is a framework that allows you to know every single time, if I have extra money and I'm going to prioritize paying off one, which ones do I do? I think I've talked to people like you have, Joey, because I spent a lot of time working in the medical and dental world where people would want to prioritize their student loans because it was the thing that when they came out of school, before they bought their first house, they already had 6 figures in debt in this one area. And they're like, my focus is as soon as I start making money, all I'm going to do is take every extra dollar I can and put it toward it. Well, I just put together an example here of a student loan of $100,000. That's a big debt. And if it had an $800 a month payment, you'd be like, oh, I need to absolutely focus on paying it off. But Joey, when you look at that index score, what does it tell you? Should this be an area that you should focus on, or is it maybe one that's not as important given the list of other debts that are on this equation?
Well, it's again, if you haven't seen this, go to the YouTube, but it gives you an index score of a 125. And on the scale here, anything above 100 is getting into the freedom zone. That means that's something that's probably not the priority to pay off, and you could use that cash somewhere else more efficiently. That's essentially what this thing is telling.
All right, Eric, I want to come to you. Like, we start talking about prioritization around paying off debt. Should people focus on paying off low interest debt, like mortgages, or is it better to invest those funds potentially elsewhere? Because that's kind of what you were leading to earlier.
I think for our whole lives, Russ, we have to try to run all of our lives through this same filter. What's the best use of filter? So when I think about that for me, I try to think about what's the best use of my time? What's the best use of my talent? What's the best use of my finances? What's the best use of my energy? And if I'm running all these things constantly through that filter, I'm getting to a better answer. So if I use that in my finance situation, for example, right now I have a house that's at 2.25% interest. So any dollar extra that I pay on my house, I'm saving $2.25 on that loan. Do I think that I can take that dollar and go earn more than $2 or 2.25% interest somewhere? Well, absolutely I can. So the math tells me on as far as paying off a home with this low interest rate that's asset backed, the math tells me it wouldn't make any sense at all to put those dollars into paying off my home. Rather, I can take those dollars and assign them a better job a better use job of earning more than that 2.25%.
Well, and it's not even 2.25%, because if you're itemizing your expenses, right, on your taxes, then you're going to be able to deduct that interest expense, and it actually is reduced even further by whatever your tax bracket is.
So true.
But that's kind of leading us into a point we're going to get to in a second, is what kind of investor are we, and how do we know when to do this?
There was nothing worse than walking into class when you're in school and the teacher saying, pop quiz day. Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
Mark, I want to talk about refinancing, right? Like, I know when we first met, and you've talked about this openly on the show before, you had paid off a lot of debt and you started, considering different options. Is there a situation where someone could actually start refinancing out or getting money back out of things that they had put money in initially to help them as a stepping stone to becoming financially free?
Yeah, you can take the paid off house and remortgage it, which is exactly what I did. Look, I went down that road. I paid off the very first piece of property I ever owned. It felt amazing for about a day or two. And then I saw all my friends locked up inside of that piece of property, not working, stuck behind the jail door, waiting to get out, let my people go, right? I was waiting for them to be freed. And so I had to go back to the bank and re-enter into an agreement with them to get access to those dollars. So in that sense, to Eric's point, I saw the value of liberating those dollars and putting them to work. They weren't earning me anything inside of that piece of property. They weren't doing anything measurable that I enjoyed. But to this, I will push back on this. I want to go back to Eric's first point. What is your goal, right? So I, in this moment in time for this example, was in my early 30s. I was in that middle phase where, maybe some strategic debt might be a good idea. Fast forward 40-something years, my dad is in his late 70s, and he decides to pay off his house. Well, if we go by kind of what you might have heard us saying, you might think, well, that's a horrible idea, an absolutely foolish idea, because that money could be doing so much more. But Eric also said you got to do a risk-based assessment. What are you trying to do? What is your goal? Is it getting you closer? His goal was to not leave my mom a mortgage on the house. So he had a life goal that he wanted to pay off that house, and he wanted to make sure that if he passed away, she did not have a mortgage. Well, lo and behold, this guy knew his time was coming due, and a couple months before he passed away, he wrote a check and paid off the house. Now, he was in that scenario where he was blessed that he had so much money coming in that he didn't really know what else to do, and so he was able to fulfill a life dream. And he was able to protect my mom because that was his goal. That was his vision. So for him, he's in a different season. He's fulfilling a goal. He's in a different spot. He's already financially free, which then led to him being debt free.
No, I think there's a lot of conversation out there of good debt versus bad debt. Okay, if you guys want to chime into this, I actually don't believe in such a good debt, bad debt discussion. I think there's just debt, and your scenario dictates whether or not it's good or bad for you, right? Like some people would say, oh, Russ, that's not true, because credit card debt is clearly bad debt. Nobody wants credit card debt. Well, I mean, one of our friends who is a publicly traded CEO and, worth a lot of money, probably one of the most wealthy people I know personally, one of the first deals he ever did when he was buying real estate back in his early 20s is he took a credit card loan and bought a piece of real estate with it. He used that as his down payment, right? Like got the credit card check and wrote a check from it, and that was his down payment. So was that a good deal for him? Was that good debt? Well, I mean, he actually talks about that. That was an initiation that got him into considering different ways to build money. There's other people who have credit card debt because they overspend every single month. And the problem is that they have not built a personal profit and loss statement for themselves. They don't understand what they're spending, and they're building up debt on credit cards because they overspent. So for that person, credit card would be a bad debt. But you can't just isolate and say credit cards are good or bad. It's very unique to the person's situation. Everyone can use it differently. It is just a tool. All right, I'm going to go. We've talked a little bit about debt freedom doesn't equal financial freedom. I think we've all agreed on that. There's some strategic ways that we can manage it. Hopefully you're using that tool that Joey gave you access to. If not, we'll make sure you get it in the show notes. But let's move to the third point. This is where we spend a lot of time, especially if you're reading our book, the path to financial freedom, the 3 steps to getting there through passive income. It's really focused around this path component. And I think it has a lot to do with what type of investor you are. And you have to know what kind of investor you are. So Joey, what type of investor is better suited to leveraging debt, and who should avoid it altogether based upon just some things that you've learned over the years?
Well, I'll say this. I think the longer that I'm in the game, the more I realize what I didn't know when I first started. And I'll share that with you as a pause to being an early investor that leverages themselves to the hilt. There's way too many variables whenever you start thinking about the types of things you should be getting into, what sort of experiences are around the corner that you may not know. I think the type of investor, and I'll quote Robert Kiyosaki, he says, I got $1 billion in debt. And he's proud of it. Like, he's excited about it. He said, because that is where all my wealth is come from, is I've been able to leverage that into the most passive income, the most wealth ever. But he wasn't always there, right? He had to start somewhere. And so if you're a new investor, I would start with something as simple as our tool, the Investor DNA profile, right? Find out what sort of things line up with who you are, how God has created you, what resources he's given you, what sort of experiences you have, and start at a point where you can learn the lessons on your own dime without having to leverage yourself into a bunch of debt that may not work out for you, right? Nothing is guaranteed in the world of investing. But, to answer your question, Russ, I think you have to be a mature investor to really go into this world of leverage. But once you unlock that, once you get to a point, it can be the accelerator that gets you to massive wealth.
Yeah, if you want to go to wealthwithoutwallstreet.com/resources, we actually have an Investor DNA ebook that can give you a lot of details to help you guide down that road. All right, Eric, tell me on your end, what type of investor do you believe is best suited for taking on debt, or is there a best investor classification?
Yeah, I want to talk a little bit about what Joey said just a minute. I think about, I was watching one of these professional poker tournaments the other day. I saw this guy that was playing poker. He has all these chips, and he just pushed them all in, and he said, "I'm all in." And I was sitting there, and I was sweating way more than he was, because I just couldn't imagine however many hundreds of thousands of dollars that was that he was pushing in, that he was putting it all in on that one card flip, on that one deal. And I began thinking about when I was a young investor and first was able to get my hands on some capital, how I kind of did that with, a HELOC here or there, or, borrowing some money from parents or whatever. Is I thought, man, I know how this investing world works. This is what this syndication says it's going to perform. This is how it's going to work. And this is a no-lose situation. Well, that's not really being an investor. That's being a gambler, because I don't understand the game, and I didn't understand the game. So I want people to understand when they hear us talking today about, Mark taking mortgages on his house, or me using my HELOC, as I still do today, to make investments. That doesn't mean run, to your wife or your husband and say, "Hey, we're going to take out a HELOC today, and we're going to do it all on the next crypto coin that comes available. That we're going all in." That's not investing. That's gambling. That's a lot of risk. And so really spend time thinking about how much you understand the game. What is it that you can take those dollars and use as a tool and add value to? Maybe you understand real estate. Maybe you know somebody in real estate that can teach you how to leverage in real estate and take baby steps and learn and grow, like Joey was talking about, to become a more seasoned investor and ensuring that you don't go all in. So yes, Russ, I do think that you need to invest and leverage, and that should follow the goals that you've set for yourself and your understanding of where you're putting your dollars. And that makes a really good investor. And that's a good opportunity for somebody to use leverage.
Joey, I want to talk, as we start to wrap this, some scenarios of where maybe you've seen an example of where someone used debt as a tool, and it actually helped them accelerate to financial freedom. Can you recall an example on the spot of where somebody went and borrowed against something, whether it was a life insurance policy or a home equity line or whatever it may be, and used that as on their path to becoming financially free?
Well, I'm gonna actually break it down even a little bit differently than what your question is. There are people that I remember over the years that came with a very limited perspective of what they could do to get to financial freedom because they felt like every dollar was going out that was coming in. If you asked them, hey man, how much are you saving per year? They're like, just really not super confident that it was a whole lot. And you start looking at their cash flows, and they were doing some of the things we're talking about today. They were doing things that sounded good at the time. One guy in particular I can point to had a 10-year mortgage. He had refinanced from a 30-year down to a 15-year down to a 10-year because he had the goal at one point thinking that that was the best use of his money and his cash flow. Once he started to think differently about what we're talking about today, he refinanced back to a 30-year to get massive amount of cash flow per month back into his pocket. Then all of a sudden, he had in position to leverage into investments that created more passive income. So he had what Nelson Nash would talk about, a tailwind moment, right? He had, instead of the debt coming at him, like if you're driving an airplane and that wind is coming at you, it's holding you back. That debt was holding him back. He turned it into a cash flow that now is going behind him, pushing him forward. And that's a still somewhat philosophical picture that I'm trying to give you. But what are the things that you're doing that are maybe a headwind to you right now that could be a tailwind, could be getting you closer to financial freedom if you just thought about the way you're paying the debt off differently? I want to challenge you to meet with one of these coaches and look at it very objectively, like we've been talking about today, and use it as the tool to get you closer to financial freedom.
Well, I can think of one investor in particular, someone that came to our world, had a very traditional financial background. And he says this over and over as he shares in different groups about what he's learned as being a part of the Wealth Without Wall Street community. He's like, I understood that so little prior to getting here that when I understood who I was as an investor, I learned what the strategy to become financially free is. I needed to build passive income streams. And he's like, the first thing I needed to do with my cash is I needed to invest in my own education. I was not a good investor. Like, I literally had taken the approach of delegating everything off because I was a quote unquote busy professional, that I had not spent any time investing in my own financial education, which left me uninformed and exposed. Yet when he understood, once he started learning how to invest, he became such an investor to the point where opportunities were abound. But the problem was he didn't have enough cash, because at that point he'd put his money in places that he couldn't access it. So what he actually started doing was borrowing money, created an investment fund where he started borrowing money from other investors who wanted to get into deals. So that was debt, right? A different type of debt. But he was able to then start utilizing those financial things that he had learned from investing in himself. And now he's put himself on a completely different track, right? He travels the world. He literally has become one of those people that people say, oh, man, I wish I was like him. Well, he used debt as a tool, but it took him understanding who he was as an investor first and then investing in that. But I'm going to give you another example. Here's where debt can be really bad, I think. Here's where a scenario where I know somebody pretty close that has put a lot of their cash into something. The debts are interesting. When we invest in things, sometimes we have to put cash down on those. How much of our cash are we giving up? And then what is the debt associated with it? I don't think enough people consider how important access to cash really is. We say it all the time that the biggest obstacle becoming financially free is lack of access to cash. And I know someone that has taken a large portion of their cash and put it down on something and then had a debt associated with it. And that debt has become very burdensome. And because I feel like the main reason is that they don't have access, they don't have that cash reserve that they used to have. So I think we have to try to realize how much money do we have access to? Sometimes having access to cash and having a debt payment is not that bad. But if you don't have access to cash and you got a debt payment, then yeah, you start to feel on edge. So your scenario is very dependent upon lots of circumstances. So I don't think while one person can say, what is good debt, bad debt? When should I use debt? I should or should not. I think Mark's statement of it depends is always true. And one of the things that we do here is every time somebody comes and speaks with one of our coaches, they're going to go through this thing we call the right next thing process. It's going to help you really prioritize what is the most important right next thing for you. And the beauty is that it's not a one size fits all, because everybody has different priorities based upon where they are. And we know that to become financially free, you have to follow steps and you can't skip steps. And that's usually the problem that people have gotten into. So Stallion, thank you so much for sharing. Thank you for listening. If this is something that you found a value in, take time to rate, review the show. This is how other people find us. Whenever you hear somebody, a podcast host, say, rate, review the show, it's not just a thing where they can poke out their chest and say, oh, I got this many ratings or this reviews. No, reality is that it's a way other people get to find the show. It's how the algorithm says, oh, people are interested. We know we've had, close to 2 million people download this show, but only a couple hundred people have ever rated and reviewed it. So be one of those people. If you've been listening, you find value in this, just take time. I don't care if you tell Russ, you talk too much. Say it. I don't care. But just let us know, because this will help people be able to take time to know where this show exists and what you're finding value. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand, so that your wealth will never run dry. See you next episode.